the fixed income market is recording huge sell-offs ahead of the release of the first quarter bond auction calendar expected this week. However, market watchers anticipate a slight shift compared to about 225 billion naira sell-off across standard maturities recorded in the previous auction. Chuka Nwachukwu, head of fixed income trading at UBA, joins me now for more market updates. Chuka, thank you so much and Happy New Year to you. Thank you for joining us today.
Happy New Year, Esther.
Well, let's get right to it. Speak to us about these sell-offs. What's the strategy here?
Okay, thank you very much. The week has started on a bearish note, like you mentioned, especially on the bond side. The sell-off is largely because of the uncertainty as regards the bond calendar. We expect to see the calendar out maybe within the next 48 hours. Between now and Friday, the calendar should be out. So traders are just trying to be safe, wary of what the outcome may be. It's speculated in some quarter that the volume might slightly increase due to the high level of borrowing anticipated this year. One from the supplementary budget, and then of course the main budget is set for 2023.
Now, I asked an analyst yesterday, and I'm going to ask you also, what does this mean for the market if we do see, how are investors anticipating along the lines of, for instance, rates especially? I know that obviously the government is going to borrow more, but the government also is keeping an eye on debt servicing, the big elephant in the room. But what do you see, how do you see this playing out?
I see that the government have limited choice. They have to borrow heavily, especially on the at the local market. If you read through the communique from the Minister for Finance, and you see that she actually also mentioned that they are going to borrow specifically on the bond side. So, the market watchers are they are very optimistic with the election coming around, and then with a host of other distraction. I believe that once the election is over, the market will come alive, and then the borrowing, like we anticipated, will hit the market, and there we will probably see a much higher yield as at now. Presently, the yields are a bit depressed due to activities coming in from the last quarter of last year and then early days of this year.
Right, we'll keep an eye on that. Now, investors are still, the market is still awaiting the auction results of the 57 billion treasuries auction. But what are your expectations?
The expectation is that the yield will depress a little bit. My take is probably depress around 25 to 30 basis points. The last auction result 1 year came out at 8.49, and I'm guessing that we'll probably see around 7 or 6.5% as the case may be. So the market actually is at what with liquidity, and that is what is is pushing this bullish sentiment we are seeing on the TBO side.
All right, let's quickly talk about the Naira, seeing it appreciating against the dollar at the INE window. Is that the same for the NAFEX, and what can we expect in terms of demand and supply? Yeah, the Naira is currently trading at INE currently trading at 461 levels. The demand has always been there. It's just the supply that hasn't quite met the demand. So as long as the supply, the demand outweighs supply, we'll continue to see depreciation here and there. But I think so far the CBN has been able to keep the depression very low with their intervention in the market, and so I see this continue probably towards the end of the month and probably the end of the quarter. Right. We have about a minute left. Your forecast for the rest of the week for bonds and treasuries? Yeah, my forecast for bonds, first of all, is that we will continue to see sell-off, especially on the 2034, 2037 as well. Those who went short the last time at 2037 record that the result came out at 15.8 from 16.2. So a lot of people went short at 16 levels, and they will look to cover. So we see a bit of activity on that end, people trying to cover. On the T-bill side, as long as there's still huge liquidity in the system, the system liquidity open around 449 billion.
and that's huge. And so the system is still awash with liquidity. We'll continue to see a bullish sentiment because people will need to invest this liquidity in the available security space just to avoid a CRR debit at 0%.